And so we enter Memorial Day weekend. And this photo here is the 1928 winning Indy 500 car driven by Louis Meyer with an average speed of just over 99 miles per hour. And the car owner was Alden Sampson II, my wife's grandfather. Alden Sampson never won the Indy 500 again, but placed in the top 10 several times. It was Louis Meyer who, being thirsty after the end of the race, started the tradition of drinking milk after the win because it was the only drink available at the time. So this weekend we pay the annual tribute to Alden Sampson. Looking at the markets, Chinese stocks were lower on the week with tech-heavy indices hit the hardest. European markets were all lower on the week, led by Italy. U.S. stocks were also down on the week as trade tensions escalated and morphed into growth scares. The Dow was the least worst, while the trannies and the Nasdaq suffered the most. Although the least worst, the Dow is down 5 weeks in a row, the longest losing streak since June 2011, all because maybe hope of a Chinese trade deal has collapsed. Well, at least for today. It may change tomorrow. And so, let's take a look at the charts. We're going to go through the full process looking at three charts, beginning with the 20-year monthly on the spiders. The SPY, the close on Friday was 282.78. We got up to that point there, which was a record high, but we reflected on down here and we're having a small correction. Hopefully, it's only a small correction, at least at this point in time. It can get worse simply because the fast line was attempting to move up to and through the slow line, but it got reflected back. So the question is, are we going to end up with something like that? Or are we going to end up with something like this? My bet is still the 2015, 2016 type of a correction. But these types of reflections off of the slow line can turn into waterfall sell-offs pretty easily if things don't go as planned. And things never go as planned. So expect the unexpected. Moving down into the histogram, you can see the reflection at that point, just small at this point in time, but it may get worse. Now, the oscillator to watch, in my opinion, is the price rate of change. We have the reflection down there to the bottom, the move up, and then back down here. So, is the market, or at least this oscillator, going to be able to base and then turn up as it did here or here? Or are we going to have something like that? So we got to be careful because if it's something like this, then it can turn into something like that. We have to be careful, and with the trade tensions, anything can happen. I'm going with the probabilities that we're going to be able to base in here, but there is also a probability that things can sell off pretty hard. So we'll have to wait and see, but the relative strength tells us that we're a little bit strong with a measure of 55.99, which is above the midline or that 50. So we'll see how far down this goes. And even if it goes below the 50 line, that's still not too bad. The stochastic is a late measure at this time. We won't pay too much attention. Volume is heading down. And then the Williams is also a late measure. Back on up again. Watch that price rate of change. I think that's the main one in the monthly chart. And back up to the price chart. We'll have to wait and see how far down we go. Are we going to go to the 20 EMA? Are we going to go through that and down to the 50 EMA? I don't think we're going to go down that far, but that is a possibility, but not the probability. Let's go to the weekly chart. And here we're looking at the 2-year weekly chart on the SPY. Last week I had some hesitation because there was some contradiction between the daily and the weekly chart. Now I went with the weekly chart and I'm going to stay with the weekly chart because it still seems to be in control, but there still are those contradictions. And we'll get to the daily chart here shortly. But as you can see, with the hesitation in the market and the confusion of which way we're going to go with the trade tensions, we're getting a hang up. at the 20 EMA on the weekly chart right here. So it's come down and it's sort of bounced off, but are we going to continue through that and down to the 50 EMA? I think looking at the MACD, that's going to be the probability. As you can see, if you recall from last week, we had a relatively shallow move in the fast line, but it's starting to steepen and go deeper. So I think that that fast line is going to pierce through the slow line, which means it's going to continue on down here, more or less in, say, this sort of fashion, which means markets should follow suit. Looking at the histogram shows the same thing. Price rate of change as well. The relative strength has gone through the 50 line, which is not a real big deal. If you remember back a couple of months back, we did that. And then back in the 2015, 2016 timeframe, we also went down there. So we can go that low, certainly. Looks like the stochastic wants to head down as well, and the volume not giving us much of an indication. Williams is now under 50, and it will most likely, I think the higher probability is continue down. So my bet is that the continuation of the sell-off, but that doesn't mean that next week is going to be a further sell-off. We'll see that here in the daily chart next. And we're now looking at the 6-month daily chart on the SPY, and you can see here the first attempt to move through that 280 was there, and the second attempt was here. In the interim period, the market tried to move up through the 50 and the 20 EMA, and it was unsuccessful, got reflected back. And you can see that here in the MAC as well, where that was the first attempt at 280, and then the second attempt was there. In the midterm, it tried to move through the fast line and the market tried to head up. I think that is going to be delayed into next week, maybe late next week or early the following week. And at that point in time, I think we'll probably start heading up. And again, we may head up, but I think that's only going to be temporary because the weekly is still in control and it says overall that the market's going to head down. But for the time being, the market hit that bottom there and it's trending upwards, so it's improving in that strength. Price rate of change is still sort of dropping, not really showing any real change, at least in the slow line yet, but I think there is a basing attempt in this area here. Moving into the relative strength index, this to me shows some improvement with the bottom there and then the upward move, trying to move up to that 50 line and hopefully above. And I think that's going to be happening late next week or the following week. And that is also shown here with the stochastic. The fast line already moved through, but back under the slow line. So definitely a bottoming process is occurring there. And I think it's going to make another successful attempt at moving through the slow line and then on up. So we're going to have a rally in the market sometime maybe late next week and certainly perhaps the week after. We'll have to see how things are in the next update a week from today. Volume looks okay, and then the Williams also showing that that bottom was there and improvement at least on the daily in a temporary or interim period. Moving back up here, we're going to move sideways as we have here for a little while longer, but then I think ultimately the market is going to improve, at least again on an interim basis. So we'll check things next Friday. For now, I would not do any buying. Any selling should have already been done. Any positioning in your portfolio should already have been done. So let's just sit back, watch, and relax and see how things play out. For today, that's ChewDog Charts. Thank you.